Prospectus Review Number 2, American Funds, Growth Fund of America, Part 2. This is Ken Boyd, the owner of St. Louis Test Preparation. Here's our Facebook page, St. Louis Test Prep, and the website. I have a couple of sources on the screen. One of them is a link to Morningstar, which I talked about on the first video. So you'll see down here where it says quotes Morningstar. And then this link that I have highlighted is a link to the actual American Funds prospectus information. And I should note here that investors should carefully consider investment objectives, risks, charges, and expenses. This and other information is contained in the fund prospectus. Summary prospectus can be obtained from a financial professional, should be read carefully before investing. Past performance is not indicative of future performance, and this presentation is for educational purposes only. So here is, when you go to the American Fund site, and you can see the address at the top, this is the summary prospectus for Growth Fund of America, which is one of the largest, in terms of assets under management, one of the largest funds in the country. And it says here that you can click to view the fund's statutory prospectus or statement of additional information, because we changed in the brokerage business years ago to sell mutual fund products with shorter, more easier to understand prospectuses, with the hope that investors would read them if they were a little shorter, more clear, and easier to read. I'm going to skip through the classes for a minute. It does tell you at the bottom where you can get other information both by the web and by a phone number. So the fund's objective is growth of capital. It is a growth fund buying stocks and hoping that a combination of dividends and capital gains will cause your money to grow. Fees and expenses of the fund. This area has become very complicated. And what they try to do at American Funds is to give you a table and say, this table describes fees and expenses that you will pay if you buy and hold shares of the fund, meaning that you're holding them. And the old number used to be at least 5 or 6 years. In other words, the intention is not that you buy and sell it, because as you'll see, given the fees, it's a tremendous cost if you buy a mutual fund and sell it within a few years. There are sales charge discounts if you go above $25,000 in American Funds. One nice thing about the big fund companies like American Funds is they offer discounts for purchases in any fund. So if you have 5 different mutual fund investments in Putnam, for example, another big fund company, they will combine those for the purposes of discount. So it's a little complex, but what they tell you is, and these are the share classes up here, is that if you buy A shares, which are the traditional mutual fund shares that charge a sales charge at the beginning, that maximum is 5.75%. Imposed on the purchase as a percentage of offering price, so it comes off of the top. There is a maximum deferred sales charge, 1%. So what you see here is that there are various cost structures. B shares and C shares have no upfront, but can have different levels of deferred sales charges. And it goes on, and I won't go into all of that because it gets into more minutia than I'm interested in here. Operating expenses, a management fee to pay the managers for managing the money, 0.28% on all the classes. Other expenses here, and they talk about annual operating expenses for the whole fund down here. And you can see up across the top here, there's a variety of management of fee structures. So they give you, which is nice, this is on page 3, as you can see off to the right, if you invest $10,000 in the fund for the time periods indicated, and redeem all your shares at the end of the periods, and you had a 5% return each year, how much money would you end up with based on those assumptions? And they give you the share classes down the left. They give you the year, the periods of time you invest across the top, and how, in this example, that $10,000 and your costs would break out. How would your costs break out? So for example, if you look at A share classes here, you can look at costs. So there's tons of scenarios that give you this chart to help you figure out what your true cost would be. And then they talk about turnover, which has to do with how often does the firm sell the investment for cash, and in a typical year, what percentage of the investments in the fund are sold? Probably the best way to look at turnover. So it says the fund pays transaction costs, such as commissions, when it buys and sells securities or turns over the portfolio. Now, these big fund companies typically buy and sell shares of stock or bonds at very, very low cost because they're selling so much of it. Another impact, though, when there's turnover is if you are not in a tax-deferred or tax-exempt sort of vehicle for your investment, you're going to incur either short-term or long-term capital gains or both. So that's why they say it may result in higher taxes here if it's held in a taxable account. Says during the most recent fiscal year, and I'm looking at this in June of 2013, the fund's turnover rate was 18% on the average value of the portfolio. So if the fund had $100 in it, on average, it sold $18 of that $100 of securities in a given year. Again, back to investment strategy. Invest primarily in common stocks. They can invest a portion of their stocks outside the U.S. We saw that in the Morningstar information. They talk about multiple portfolio counselors. If you look at part one of this presentation, you'll see that the people who work at Growth Fund of America have been there a long, long time, which investors generally view as a positive. The fund's divided into segments managed by individual counselors who decide how that segment should be invested. So maybe you have a guy who handles retail stocks, a guy who handles financial stocks, financial services like banks and brokerage firms, another guy that does food and beverage, different sectors. Says they use fundamental analysis, which may include meeting with company executives, employees, suppliers. A lot of these fund managers are on the phone when companies come out with their earnings reports asking questions. Principal risks, you get this in every prospectus. You may lose money investing in the fund. Says the likelihood of loss may be greater if you invest for a shorter period of time. Because the goal of a mutual fund, as you see here, is to have a long-term perspective and be able to tolerate potentially sharp declines in value. And one thing that we've seen over the years is, particularly in recent years, the last 5 or 7, we get very sharp changes in stock values. So the risks that they list: market conditions, the overall market. Says growth-oriented stocks, companies that we're looking for higher dividends and higher earnings, may involve large price swings than other types of investments, then going out more price swings and more risk than if you went out and bought a corporate bond or a government bond, for example. Outside the U.S., political, social, and economic developments. It used to be that companies outside the U.S. didn't have accounting policies and reporting that was as good as ours. Maybe politically they're unstable. So maybe it implies a little more risk investing in stuff outside the U.S. as being in the U.S. Management. It says an investment advisor to the fund who manages the money actively manages the fund's investment. So your risk is that the methods that these investment advisors use may not produce the desired results. And by desired results, we mean the results based on the objective of the fund. It's not a bank deposit. It's not insured or guaranteed by FDIC. FDIC offers insurance on bank deposits up to a certain dollar amount. This is not a bank deposit, so they're trying to get that across. And also, it's not guaranteed by any other government agency or entity. They give you a bar chart that shows the how the investment results have performed year to year average annual total returns. So, assuming that you buy A shares, which we saw on the prior page, it's paying that upfront sales charge. Here's how the fund has performed. Now, note that it says in parentheses, the results do not include a sales charge. If a sales charge was included, the results would be lower. So if you did buy the Class A shares and pay that fee up front, obviously your return would be lower. So you can see that there's big swings. We had some years where the returns were over 30%. We had a year where the return, 2008, very tough year, was negative 30%. Now, what you should do is compare that with what the overall market did for that same period of time and see how that fits your comfort level. The last thing we'll cover here today is average annual total returns, assuming somebody pays a maximum sales charge. And is typical in a prospectus. We've got 1, 5, 10 years and over the life of the fund. And the life of this fund, you can see, has been since 1973. It's been out there a long, long time. So the A shares have been out there since 1973. You can see that there are other share classes that have not been in existence nearly as long. And as investing and taxes got more complicated, they came up with more and more share classes. So you can see that all the way down here. So if I look at, to wrap up here, if I look at the A shares over the lifetime of the fund, if I look at A shares over the lifetime of the fund, it's a 13.2% annual return in this prospectus as of 12/31/2012. So from that date, since 1973, 13.2%. If you compare it to the S&P 500, over the lifetime of the Class A shares, it's 10.51. So the fund has outperformed the S&P by a little bit since its inception in 1973. That's as far as we'll get on the summary prospectus. Keep in mind that I do teach the toughest accounting topics online. These are the topics I'm asked most about by tutoring students. Here are the upcoming courses. New dates are always coming up. If you have an interest, you can email me. And you will also see upcoming live chats where I do these prospectus reviews live. And you can go to my website and you will soon be able to see a page on STL tests for that. Thanks very much for watching, and we'll see you next time.